The term financial freedom means different things to different people. For what I'm going to cover here, we're looking at ways to help you generate income from your investments in a way that's reliable, while leaving you in full control over your assets. One WiserRobo answer that supports this goal is actually one we've previously covered in another video, namely the simple portfolio balancer. I'm going to start by setting up a new balancer plan here as I talk. In the previous video, we showed how the portfolio balancer can help you build and grow a well-balanced portfolio. What we've done is enhance this by adding some new options related to income generation. The idea is once we've got our portfolio in a place where we're focusing on income as opposed to growth, we might structure it around getting a 4 or 5 or 6% return using index funds or a combination of funds and other instruments that we favor. And then the big change is we might be turning over those gains into cash and pulling out that cash as income. Keep in mind, our primary goal with this specific answer isn't to tell you what to buy initially, so this approach isn't going to be for everyone, such as if you're looking for a fully managed portfolio. Instead, we're using your existing brokerage accounts, offering buy and sell advice based on the performance of your holdings, whatever they happen to be. So here I'm at a point where I've set up a portion of my plan, and I've got an option to set up an income generation strategy for this bucket that I'm simply calling income. And I've included some ETFs that have historically had at least a combined 5% annual return, and this is what I'm hoping to achieve to base my income on. So with this income bucket, here's where I can indicate I'm interested in using an income strategy with it. And the options available here are applicable only when I act to generate income, as we'll see later. This first option, called sliding percentage, is what I'll go with. So what does that actually mean? It means if we set a 5% target for returns and we end up getting 6%, say, we'll sell 5.5% worth and retain the additional 0.5% to grow our asset base. Then if in the next year things don't go as well and we only make 4% returns, we'll pay out 4.5% instead and eat the 0.5% from our base. So this isn't a truly fixed income strategy. It can fluctuate depending on our returns, but it's smoothed out around a target which, if we hit it, will give a predictable amount of income. And it rewards us if we do well with what amounts to a bonus, that additional 0.5% in our example. The hope would be to have excesses offset the shortfalls over the long term, or even better, continue to grow our asset base. In fact, we offer a separate parameter here to optionally address inflation, with the default being set to 2%. When this inflation value is used, we still target the 5% level in our example for income, but we retain enough growth in our base to ensure by the time next year rolls around, it's 5% against a base that's 2% larger, which gives us more income. And within the income strategy, we have separate options for rebalancing actions and tax actions. So how can that work? You've got an option here to go strictly with tax loss harvesting if you pick tax strategy only here. Or you can go strictly with a non-tax based strategy by picking none here for tax strategy, and for example, maintain current proportions here. And in fact, the default is to ignore tax considerations. So with default settings, we're purely balancing existing holdings or selling them for income generation purposes without considering cost bases or dates of purchase and so on. Or if you combine them like I do here, maintain current proportions and basic tax loss harvesting, then we average the outcomes to come up with your final transaction amounts. Or if there's a case where, say, there is no tax advantage to be had, we still have a strategy to apply for income generation. In the scenario of using an average, and you've selected maintain current proportions, you might not strictly maintain your current proportions among your bucket holdings during a sale of assets, but current proportions play a role along with the most advantageous tax strategy as it relates to the selling of assets. And we're doing it this way to offer maximum flexibility, and through backtesting we're likely going to discover some interesting results by combining strategies. At this point, I'm going to enter some values that control how this income strategy is going to work. Here I'll specify that my target will be 5%. I can also tweak the algorithm to say what proportion of our overage or underage will become our bonus or deficit respectively. The default is 50%. At 0%, we'd be effectively forcing ourselves into a fixed percentage strategy. Another thing I can do here is indicate the starting date for when I want to start this income strategy, and I'll backdate this one by a couple of months to illustrate what would happen if we really had started this earlier when our account balance was lower. Otherwise, we won't get any suggestions, since suggestions are based on the time elapsed between income generation events. And finally, I can say whether income generation tries to use any available cash balance first before selling assets. And keep in mind that these 5+2 settings imply that we really need to get a 7% return to be effective here. So that detail is being mentioned over here. So I'm done setting up this income bucket, and I'll save it now. And further, as we can see in the summary here, I previously added a second bucket that will constitute at most 15% of my portfolio. I've included some higher yield items in there, like a few individual stocks and a portion of some ETFs that I deem somewhat more risky. The idea here is that bucket, which I've called growth, can remain floating, as in I won't use it for income, but if it does well in the rebalancing process between buckets, it may end up contributing value to my income bucket, kind of like adding a turbocharger to a car. But if it doesn't do well, it won't negatively impact my income bucket either, since it's set as a maximum portion of my portfolio, not a minimum. And in fact, the income bucket has an 85% minimum. Otherwise, we risk leaving more cash than we'd normally like sitting around if our growth bucket starts selling off its excesses. And I suspect this is a good way to go to support different types of assets. For example, I could dedicate a percentage of my portfolio to a combination of bonds and stock options, where gains could roll over and be dealt with through balancing. Or I could even set different percentages of income distribution for different buckets independently if I feel confident about estimating my future gains for each. In my case here, I'm implying that I know the 5% gains of the income bucket are easier to predict than, say, what I'd get for individual stocks. Certainly hoping for better gains there, but I don't want to rely on that for income. So the big question is ultimately what works best. I would say stay tuned. I plan to do some serious back testing on various strategies within this framework, and I'll report back through the WiserRobo blog. So I'm going to continue with this and save our balancing plan now. Now if I go and run the plan, it looks similar to what we saw in our earlier video. We have some suggestions to rebalance right off the top, since our holdings weren't meeting our prescribed 85-15 mix. I also want to show off a new feature added since our last video. You can select a new view type here to look at the trailing 12-month performance of the various components of your buckets. I think this is pretty interesting, and is showing here, for example, that our income bucket does tend to perform below our growth bucket, but we've done pretty well, and a 5% annual goal seems reasonable. And some of the fairly close correlation here is probably in good part due to the fact that we're sharing a portion of some of our stocks in both buckets. And another key difference from our earlier video is we have this new option showing at the bottom to generate income transactions. Before I click that though, let's take note of how many shares of Gilead are being suggested to be sold, strictly for rebalancing purposes only. And let's also make note of our current cash balance as shown here. And now if I click the income generation button, I'm getting some details about how things have progressed since I last generated income. And in this case, I backdated a couple of months, so we're really seeing progress from that starting date. And notice our account value, our really bucket value in this case, has increased quite a bit over those 2 months. So that's good. And 5% per year prorated to 2 months means we'd be selling a little over 0.8% of our income bucket, which is this base amount here. And it's worth noting that we're seeing a change in the sell suggestions. Obviously there's more selling going on in an effort to generate income as requested. To support that, take a look at the change in quantity of shares to sell of Gilead. And that reflects too in the cash balance that's projected now after we've sold additional shares for income generation, but before we withdraw our cash, shown here. And that's supported by our net buy and sell amount as shown here. And I'd suggest the situation here is a little bit misleading. I wouldn't recommend performing income generation until we've actually rebalanced our account, since we've got a large imbalance at the moment and it's undoubtedly skewing the amount of potential income. And that's not to say I wouldn't like to withdraw $8,000 a month, but with our income bucket shifting so much more heavily to more conservative holdings with our rebalance, a more realistic figure would probably be closer to $6,000 for the 2 months showing here. And I'm going to leave demonstrating this over multiple income events for a different time. So at this point, we're still in a state where suggestions have been made, and we can click here to indicate that we've gone ahead and actually withdrawn the income. And if I confirm here, it creates an event as of today that gets used next time we want income to decide how much progress has been made and therefore what can be cashed out in each subsequent request. And it's also important to capture the actual amount withdrawn, since it might not match the suggestion exactly. Recall you're being given suggested sell transactions, but there's always a chance you won't get the exact suggested price. And that's a price that's simply the most recent end of day price we have, and it might change by the time you actually do sell. But the expectation is it'll be fairly close. So step back and imagine the process here. We might go in bi-weekly or monthly or whatever frequency you like, get our transaction suggestions, actually take a few minutes to do them in our online account, and then make a withdrawal request for the suggested amount. We may or may not need to wait for the settlement depending on your situation, and this can be treated as income once it hits your checking account. And what's the output of this? We've not changed our brokerage account balance unless we're into the underage or overage amount or to account for inflation, and we've maintained the desired asset mix. And we might have done it in a potentially tax advantaged way depending on our settings. And expect to see some enhancements where we can give you some tax reports too, so you'll have good detail to both forecast your tax load and to get actuals in real time. And it's also worth noting that this is a strategy that can in theory be relied on indefinitely, unlike an annuity that would eventually be extinguished. But again, as we often do, we might support that concept with future enhancements, just as this income enhancement was added in a really very short order. And to illustrate that point of how easy it is to request enhancements, I can click here on More, and we're brought to a page where I can rate the answer and also add comments, like so. So I think this is a pretty cool answer, and so watch for some simulations that I'll be running that test these concepts with a few different test portfolios to see what kind of performance we get over both good times and bad. We also have a couple of new answers in development to help forecast and plan your financial future, one where the goal is true financial freedom. And the best way to stay tuned to these new developments in videos and articles is by signing up for notifications at www.wiserrobo.com. Thanks for watching.